When are estimated taxes due for Q1 2024? What you'll learn. When are 2024 Q1 estimated taxes due for self-employed individuals? How do I calculate my estimated quarterly taxes? How do I pay my quarterly taxes? What happens if I haven't been paying my quarterly taxes? How do I stay on top of my estimated taxes? First is, when are 2024 Q1 estimated taxes due for self-employed individuals? For self-employed individuals in the United States, the estimated taxes for the first quarter of 2024 are due on April 15, 2024. This payment is part of the quarterly estimated tax payment system used by the IRS to collect income tax and self-employment tax throughout the year. These payments are required for individuals who do not have sufficient taxes withheld from their income, including those who are self-employed, to avoid underpayment penalties. Second is, how do I calculate my estimated quarterly taxes? To calculate your estimated quarterly taxes as a self-employed individual, you first need to estimate your adjusted gross income, taxable income, taxes, deductions, and credits for the year. From this, determine your total expected tax liability. Then divide this number by 4 to get your estimated tax payment for each quarter. Remember, you should also account for both income tax and self-employment tax, Social Security and Medicare. The IRS Form 1040-ES includes a worksheet to help with these calculations, factoring in expected self-employment income and expenses, as well as any other income and deductions. This process aims to pay as closely as possible to 100% of the tax owed for the current year, or 110% of your previous year's tax liability to avoid underpayment penalties. Third one is, how do I pay my quarterly taxes? To pay your quarterly taxes, you have several options. You can mail a check or money order along with the payment voucher from IRS, Form 1040-ES, use the Electronic Federal Tax Payment System or EFTPS online, or make a payment via the IRS Direct Pay Service on the IRS website for free using your bank account. Additionally, you can pay with a credit or debit card through an IRS-approved payment processor, though this method incurs a fee. Some taxpayers also use mobile apps or tax software that offer direct payment options. It's essential to ensure that each payment is made by the due date for each quarter to avoid penalties for late payments. Next is, what happens if I haven't been paying my quarterly taxes? If you haven't been paying your quarterly taxes, you might face several consequences, including interest charges and penalties for underpayment. The IRS applies an underpayment penalty if you don't pay enough tax through withholding or estimated tax payments during the year, or if you pay your estimated tax late. The penalty amount depends on how much you owe and how long you've owed it. Additionally, failing to make estimated payments can lead to a larger tax bill when you file your annual return, as you'll have to pay all the taxes you owe at once, along with any penalties and interest accrued. To minimize these consequences, it's advisable to catch up on missed payments as soon as possible, and consider adjusting your future estimated tax payments to better match your actual tax liability. Lastly is, how do I stay on top of my estimated taxes? Staying on top of your estimated taxes involves careful planning and organization. First, keep accurate and up-to-date records of all your income and expenses, as this information is crucial for estimating your taxable income accurately. Utilize accounting software or consult with a tax professional to help forecast your income and calculate your estimated tax liability for the year. Set reminders for the quarterly due dates: April 15th, June 15th, September 15th, and January 15th of the following year, to ensure you don't miss a payment. Additionally, consider setting aside a portion of each payment you receive into a separate savings account designated for taxes. This approach helps ensure you have the funds available when it's time to make your estimated tax payments, preventing cash flow issues and helping you avoid underpayment penalties.